That felt like a real production. This is very exciting. Hello and welcome to our first triple cast live episode of Dumb Money. We got Chris and Jordan here. We just wanted to jump on and talk about this Robinhood news because this is a big deal, and it has big impact on investing, and we just wanted to have a little live chat about it.
Yeah, and I don't want to focus too much on the news itself. I mean, Dave, maybe you could recap the news story. I want to focus more on how does this change the way we think about investing, right? How does this actually impact our investments or, our subscribers' investments now that fractional ownership is becoming a thing? And full disclaimer, for those of y'all that don't know, we're not sponsored by any of the brokerage houses, but the three of us are pretty significant investors in Robinhood. We're pre-IPO investors in that company. So I don't think that influences what we say about Robinhood, but it's something that we want to make sure we're transparent.
Just for full disclosure. But as investors, we had no idea this news was coming or anything like that. But I will do a quick recap of all of the news that they announced. Basically, last week, Robinhood came out with an announcement that in the next few months, they're going to be offering fractional shares. You'll be able to buy a portion of a stock, traditionally, $1,000 stock like a Google or an Amazon. It's out of reach of a lot of investors who don't have $1,000 to buy a single share of stock. And so this puts stocks within reach. It puts ETFs within reach. Companies like Berkshire Hathaway, where a single share is hundreds of thousands of dollars. I might actually be able to buy Berkshire Hathaway for the first time. It's stocks. It's also ETFs. It starts at $1 if you're buying if you're setting your price as dollars. But you can also buy fractional shares up to 1/1,000,000th of a share. I think that's right. 1/1,000,000. There's so many zeros in that 0.000, but I'm pretty sure that's 1/1,000,000th of a share. The stock has to be over $1, and it has to have a market cap of over $25 million to be eligible in this program. Robinhood is actually doing this in-house. They're actually buying the shares and then subdividing them amongst their account holders. It affects the voting rights. They're going to aggregate voting rights. Dividends will be paid to the fractional share owners pro rata, rounded to the nearest penny. So that's kind of the announcement. At the same time, they announced they were going to have a dividend reinvestment plan for the first time. So when a stock pays a dividend, traditionally, Robinhood put that money in your account as cash, and then you could decide what to do with it. They'll give you the option to automatically reinvest those dividends in the stock that the dividends came from. And they also announced that they're starting a reoccurring investment program. Basically, you've already been able to set up automatic transfers of money from your checking account to your Robinhood account. You could say, every paycheck, I want to have $50 moved into my Robinhood account. You'll now be able to have that money automatically invested. And so that essentially takes a little of the guesswork out of investing, and it's called dollar cost averaging. When you basically will be able to buy a stock and continue to buy it over time. Every time you automatically invest, you're getting in at the current price. And historically, as stocks go up and down, that is a good way to invest in a stock, in a company for the long term. So that's pretty much it as far as the news. Let me bring you guys back in here full screen, and let's talk. What does this do for you, Chris, as far as your potential for investing differently because now there's fractional shares?
All right, before we even get into that, because we just did an episode a few weeks ago about the best and the worst online brokers and which are right for you. I continue to feel like we do these episodes just a little bit too early because
right as some news comes out, we put our definitive answer out there, and then everything changes again.
But look what's happened. Schwab has purchased Ameritrade since that episode, right? And now we
It
have
happened the
fractional
day we
ownership.
finished editing. We had to add a screen at the end to talk about how this just happened. And we weren't about to film that episode again. It was already the second time we had to film it.
By the way, I love that episode. If you haven't watched it, watch that episode with like a little asterisk or addendum, because this hasn't happened yet. So now that this has happened, and it's not just Robinhood, it's Schwab already announced fractional ownership of shares. That's coming in 2020 for Schwab. Robinhood's
They actually announced it first, and there was a lot of rumors as to whether Robinhood would also do it. And so Schwab beat them to the announcement. Robinhood is apparently going to beat them to the actual execution.
But the question is, does this change any of our minds in terms of best and worst broker, or the best broker for you? Like, is this a deal changer, right? I mean, how big is this?
I think it's huge especially for younger investors, for new investors, for people who would love to own Google but don't have $1,000, to be able to over time continue to invest in companies like that. I think it's huge.
Right.
And I think
like bread and butter client, it is the perfect solution, right? They needed to come out with this so that you could buy stocks you could otherwise not get access to.
Do you not agree that now that this is out there, assuming you're a small investor, which most people are small investors, right? This is a must-have now. So does it kind of further narrow for most investors? You got to go with kind of a Schwab or Schwab Ameritrade, who are together now, that are coming out with this next year, or a Robinhood, because really, other than those two brokers, those are the only two major brokers that offer this. Like major brokers, is that correct?
Those are the only two majors. But SoFi did it first, and they signed up a bunch of accounts just for this feature. M1 Finance does it, Stash does it, Betterment does it, Acorns does it in a different way.
Yeah,
I think this is huge.
Different. Yeah. So I think this potentially is a game changer for small investors who were kind of didn't know if they wanted to go with an E-Trade or Fidelity, or one of the other smaller players that are popping up all the time. I kind of feel like you have to have the optionality to invest in anything you want, right? You have to have that.
Absolutely.
Yeah.
And I'm in the same boat. I was just pulling up a quote of Berkshire Hathaway, because the share price on Berkshire Hathaway's shares are $340,000 per share. I can't invest
in
Berkshire
Hathaway at any price right now. I don't understand. I'll tell you. Okay, let's just jump into how it's changing the investment mindset for us. There is a time when I think I could get interested in Berkshire Hathaway, and they have been reserving this cash hoard of like 140 billion. I don't know how much it's up to now, for like a decade, and they haven't spent it because. Well, let me tell you why I think they haven't spent it. I don't think they're smart enough in 2019. I don't think the team there is smart enough, and they've admitted to this to some extent, in being able to really understand how the world is today, and new style companies. They've missed so many opportunities the last decade that they could have been a really big part of, and they just missed it. They missed it. And they've admitted to that. I want to say Berkshire Hathaway has underperformed the last 10 years, I think. I don't think I'm wrong by saying that. But there will be a time in a major market pullback when there will be huge opportunities for someone that has a cash hoard like Berkshire. And in that situation, if and when it happens, who knows? It could be another 10 years before the market crashes again. Hopefully it will be. Berkshire is someone that I might want to own. I might not want to buy shares at $350,000 a piece, but fractional shares, someone like me can invest $50,000 or $100,000. That could be an option now.
Yeah, I completely agree. I just wanted to pull up this this graphic. This is what you actually see in the app when you sign up. Currently on Robinhood, it's a waiting list. When I signed up, there were 300,000 people in front of me in line. Robinhood does a great job of making investing fun, and they're explaining the idea of fractional shares is it's kind of like a spaceship where you might be able to just buy one component because you can't afford the entire spaceship.
Do you know what they do a better job of, Dave? They do a better job of the wait list. It is mind-boggling to me. And I love, as a shareholder, I love what they're able to build excitement around. Get on a wait list to do something that any other broker would just release and everyone would have access to.
Yeah,
but like,
they would just turn it on and it would start working.
And recruit more people. The more people you recruit, the higher up you're in the wait list. I mean, millennials and Gen Zers, the fact that you guys fall for this, I love it. I love it as a shareholder. But like, how do they get away with that? And by the way, that's part of the reason why Robinhood exploded early on, is because they had this wait list of like this like cool thing to get a brokerage account with a company that doesn't even have live customer service. But listen, that said, I love Robinhood for who they are. It's just amazing to me.
For the record, within the press release, I think they had 200,000 people on the waiting list. When I signed up yesterday to be able to grab this graphic, I was number 433,560.
Wow.
Nearly 500,000 people had signed up as of yesterday to be early adopters of their fractional share program.
The world's best financial marketers, Robinhood.
Absolutely.
You actually buy a fractional share, Dave?
You can't actually do it yet. We're on a waiting list to be able to do it.
When it comes out in 2020, is there a stock that you're looking at that you would buy a fraction of?
Well, for me, other than stock, I can only think of one stock that is out of my price point, and that's Berkshire. And I'm not planning to buy Berkshire. So no, I'm not, this is not going to change anything for me. I think that what this does, and even in Charles Schwab's press release for their announcement, like last month when they said they were going to do this, they are targeting the younger investors. They're trying to build that brand loyalty early. They said specifically expanding their access to younger clients and bringing trading to a wider audience. And that is what this does. Yeah. The three of us, we have been investing since we were 18. We have been successful enough to be able to buy $1,000 stocks. This just changes things for the people who are getting started. And I think it's brilliant for Robinhood, brilliant for Schwab.
All right.
But wouldn't you have loved this when you were 15, 18, 20, when you didn't have that much money to invest? How great would this have been?
Yeah.
Can you imagine? It would have changed everything. I think we would have actually gotten started earlier in our investing. I don't know if you could have gotten much earlier because we had brokerage accounts before we were old enough to have brokerage accounts, trading through our parents. And my dad signing me up for a mutual fund, I think, was my first investment. I remember that, the Janus Fund. I wonder what it's doing these days. And I know, Chris, you were investing in Snapple and things like that because you saw it on the store shelves when you were a kid.
I was investing in options at age 14. Yeah, Snapple was the very first one. It was a big part of my story when they had cut down the number of shelves that they were in 7-Eleven, and I identified that as a kid, and I bought puts in Snapple, and they were building inventory in the channel. It was my first trade. It was, gosh, a 3Xer in options, and I didn't have another good trade for a long time after that, but that was what got me started. And by the way, it was a $300 trade, right? But how awesome is it that you could do
$300 leveraged, and I think that there's a lot of people who might benefit from the idea of how options work. I think we should do a whole episode on options and how they work and how they can be used to leverage a smaller amount of dollars to buy a bigger percentage, something that has the ability to move a bigger percentage, both up and down.
So speaking of options, I've seen some questions about fractional options, and that's not something that's going to be released from Robinhood. Fractional options.
That would be cool.
That would be cool.
Questions about how do dividends work for fractional shares. It works basically as the proportion that you bought of the stock. Let's say you bought 5% of the stock, you'd get 5% of that dividend as it occurs.
And I know this is totally off topic, but obviously the Robinhood IPO, is on our mind. I mean, with how good they are at marketing themselves, how are they going to market their IPO? Could you see them? I don't even know. Would it be legal for them to allow shares in their IPO to Robinhood customers only? Like, I can see them trying to pull something like that, right? To get
I
even
could see
more.
them doing some kind of private placement, some kind of early access, some kind of special restricted shares that, yeah, I could see them doing that with customers.
Yeah. Well, it's not going to necessarily change how I invest, but here's something to think about, okay? Because I've been thinking a lot about, okay, can this actually change the game, even for larger investors like us? Dave, am I still on screen?
You are. You keep getting close to the camera and far from the camera.
Okay, so now, if more people are getting involved with larger, not larger caps here, stocks that are trading at larger share dollars, right?
Mm-hmm.
How does that impact just generally the amount of volatility, the amount of social buzz around those companies? If the number of shareholders for an Amazon or a Google, right, triples because of this new fractional ownership wave that's not just coming from Robinhood, that's coming from Schwab, and let's be honest, it's probably going to be coming from everyone pretty soon, right, in 2020. How does that change the dynamic of investor bases for large companies? Does that ultimately add more volatility to these kind of larger share price companies? Does it does it help build relationships with a wider diversity of investors so that when these investors that are investing $20, $30, $50, $100 today, in 3 or 4 years, maybe they're more comfortable investing in those companies because they've been investing in them for years? I mean, can this have a meaningful impact on the entire market and how it's split up?
I think it does. Primarily, it will on the entire market, but I think that the kind of aspirational stocks, the FANG stocks, the Facebook, Amazon, Netflix, FAA, Apple in Netflix, Google, those stocks are the ones that, and Tesla and things that people like find cool. Younger investors, I feel like they will have an impact. And the fact that it's basically letting a bunch of millennials pool their money and buy shares of companies that they would love to have bought but weren't able to buy as easily before. I think it does have a long-term impact. And as you mentioned, kind of building a relationship. I think if I own Apple stock, I am a customer of Apple. I buy it because I love their products. It makes me want to be a customer more too.
Well, do you know why fractional ownership is even needed? Listen, this never used to happen where we had stocks with $300, $400, $500, $600, $800 stock prices. Splits were way more common in the 80s and 90s. Splits just aren't happening anymore, not to the degree that they were. And it's been theorized
that I actually don't know. Why are companies not splitting their stocks anymore?
Because companies actually do not want the volatility that comes with smaller shareholders, okay? They actually prefer to have a more institutionalized shareholder base. So without ever officially admitting that, that's commonly known now that executives really don't want these people with 1 or 2 shares in their company that are investing $300 and talking on web boards and there's volatility. Like, that's not seen as a positive to them. Right or wrong, I don't know if I agree with them, but that's about to change. What they've been trying to prevent for 10, 15 years is about to change, whether they like it or not, because Robinhood and Schwab are now forcing it on them, right? So you don't need
they're splitting the stock for them and making it affordable to retail investors who ordinarily would have not been able to participate.
Yeah,
and the automatic investing thing, I think, is as big of news because now you'll be able to say, Amazon's the company that I want to buy. I know that it's going to be great long term. I want to keep buying because it does have some volatility. It goes up and down. If I could get onto a system where every week I'm buying another fractional share of Amazon, isn't that a good thing for the retail investor? And also, I think the long-term volatility of the stock if you have people doing that instead of trading it the way they're trading crypto.
But you used to.
I don't know. It's worth thinking about, right? Like it could have an impact.
I think it will. So
Jordan, what do
when there was a stock split, you would normally see the price drift up relative to the outstanding number of shares, right? And so anytime you can increase liquidity, then yeah, it's gonna be better for the market overall.
Well, I'll tell you what I love about this, and I can't even believe that I have this conversation all the time with educated people with money that have been investing in the market sometimes for decades. They still think that a stock with a higher share price is more expensive than a stock with a lower share price. It drives me insane. And I hope that this change of fractional ownership is going to force people to think not so much about the share price, but about the total value, the market cap of the company, right? Because it's really all about how many shares are outstanding versus the actual valuation of the company. It doesn't matter if a stock's at $400 or $40. The $40 stock could be a bigger company than the $400 stock. And people don't get that.
Well, I've seen this happen recently with Lyft and Uber, and people talking about, oh, well, why is Uber valued less than Lyft? Right? And it's
we laugh about it, but it actually has a real impact on perception and the way people trade these stocks, at least at the retail level, right? And it's important, and I think this could have a lasting impact on the market and the way people trade. Hey, quick question to both of you guys. What do you think is the next big, because we're always thinking about Robinhood, right? What's the next big announcement from Robinhood? Because they're going to keep them coming every 3 months, right? This whole year. What do you think it is?
I think retirement accounts. They currently don't have that. Every other brokerage firm does. And that's something that young investors should get started in immediately. Everyone needs a retirement account.
Yeah, I think it could be somewhere in either creating their own ETFs, their own funds, or creating some sort of robo-advisor type system.
Okay, I'll say something else. By the way, ETFs are a big part of this because, listen, if you don't know what to invest in, rather than have your money sitting in cash, you can still have your money growing in ETFs, but a lot of people can't afford an ETF because what is like SPY is like $300 and change. The triple Qs are like $100 and change, and that's too high of a price point for a lot of people. So this fractional ownership is going to allow you to invest in ETFs a lot more easily. I think it might be the credit card. I don't know. Am I crazy for thinking about that? The Robinhood credit card? I feel like it's on their mind, right?
They've already announced their cash management, basically their banking system, and they're going to be a mega bank where you can actually have over $1 million FDIC insured because they're splitting it out amongst multiple banks. And with that announcement, they're having an ATM debit card. I think that they will have a credit card, and I'll be sure to review that for you.
Yeah, I think anything they can do to make it easier for funds into trading is what they're going to be working on, right? And whether that in your checking account or your credit card, some way to get the funds in.
So you know what none of us said? None of us said live customer service agents, because I guess that's not in the cards, right? At least not in 2020.
I mean, I would love it if they did have that. I don't see them doing it, and the reality is robots are getting really good at helping you.
You don't think it would be good to have like a wait list to get a free customer service rep that you can speak to, or you got to pay $5 a month for like a platinum account? That would rub people the wrong way.
Some of the robo-advisors, if you talk to somebody, if you get over like $100,000 or $200,000 invested, so maybe that's how they do it.
That's fair. I mean, yeah. I mean, the problem is as soon as they do that, a Schwab Ameritrade is going to come out and say, we give live customer service to everyone. So they got to be careful, right? They can't charge you for it or put a hurdle in to get live customer service, because that's literally worse than the competition. Yeah. I think what they're saying is we don't need it, because Dave doesn't need it, evidently, right? Dave?
Either better.
I don't need it, and I don't want it.
Do that.
Oh man!
I do want to let you guys know that we are watching your chats. We haven't really addressed the chats yet, but it looks like we have 50 or so people watching right now. A bunch of chats coming through. I would like to take questions. Robinhood, about investing, about really anything.
Lulu, I see someone asking about Lulu Alam. Yeah, Lulu trade's going just fine. I'm in Lulu at like $2 higher, $2 or $3 higher than where it is today. You know, when I got in that trade, it's something I want to get in advance of earnings because I wasn't sure how conservative they were going to be on the forecast. It turns out that Lulu was way more conservative than I think they should have been on their projections for next quarter. I think they're going to destroy those projections next quarter. But anyway, I'm in Lulu for the long term. It's kind of one of my standard holdings now that I'll have probably for a long time. Yeah, I'm down a couple bucks in the share price, but not an issue at all. I might actually, dollar cost average in some more over the quarter as long as the data looks good.
We have a chat from True Financials. Hey, True. He's excited about the DRIP program. Yeah, I kind of glossed over that a little bit. The DRIP program it's kind of amazing that they didn't have it for as long as they did. But that's essentially where the dividends that stocks pay you can automatically be reinvested in the stock, and kind of a standard feature of the big brokerages, and really exciting that that's something that Robinhood investors will be able to participate in. I know there are a lot of dividend investors out there. It's a great strategy for building like long-term cash flow. I follow a lot of YouTube channels that talk a lot about dividend investing. Let's see who else we have on here. Orlando guy, great episode, good convo over lunch. Thank you, Orlando. He comments on a lot of our videos. It's really cool. I love the community aspect of this YouTube channel. We respond to as close to 100% of the messages that we possibly can.
Robinhood going public, there's nothing official on that. I'm sure that's in their cards in the future.
It's 100% in the cards. I think they want it to happen, but with market conditions, listen, they just raised a major round a few months ago. I want to say they have $500 million or something like that in cash. So they don't need to go public in 2020. I think they'll probably wait for the right timing and when it makes sense. Oh, by the way, Robinhood's coming to the UK very soon. That's kind of major for them, right? Because a lot of the questions we get are, how do I trade from Europe? Like all these brokers, they're not in Europe, right? Well, Robinhood's about to be there. That's a big deal, at least in the UK.
Question from the Wolf of Dubai stock investing channel. He loves our channel and our transparencies. Would love to also, it's too far away, know more when quickly share stocks that you invested same day of investment. Great content. That's something that we can do on live, and it may be the new way that we do trade boards because it's more real time. It's actual real time.
Do you want me to talk about some of my live stuff that I'm looking at right now? Guys, yeah, okay. So, all right. So we've actually got a few questions on this. A lot of y'all are starting to follow, Google Trend data. Some of y'all have web stats data. You're following Twitter. You're doing a lot of things that I talk about in my book, Laughing at Wall Street. That, by the way, if anyone wants a free copy of the book, we will send one to you. We'll mail it to you for free. Just go to Laughing at Wall Street. Go to dumbmoney.tv/book, and we'll mail a free book out to you if you want to learn more about our style of information arbitrage investing.
And I will add that we are actually in the midst of packaging up about 450 books to mail out. It is our biggest book drop ever.
Next week.
Say it again.
Both of y'all are helping me with that next week.
I'm glad to help, and we should make an episode about it. Pretty much everything we do, I'm like, oh, we should make an episode about that.
Okay, so here's the deal. You're seeing things like, the LOL Surprise. LOL Surprise is one of the hottest children's toys of 2019. It was big in 2018. It's even hotter now going into the holiday season than it was last year. The problem with it is there's really no trade that I found, at least. It's a private company out of California. There's no way to trade it. It's not like their inventory is concentrated amongst any particular vendor. So they sell it at Target, they sell it at, Five Below, they sell it even at Walgreens and CVS. It's sold on Amazon. There's really no clear trade to play the big LOL surprise boom of 2019 going into the holiday season. Unfortunately, I wish there were. Also, you guys have noticed the Baby Yoda Funko toys. Baby Yoda might just be the hottest Funko Pop product of the year. Does that mean you should be investing in Funko? Honestly, as soon as I saw it, I picked up a little bit of Funko, but I picked up like that much of Funko only because I thought people would likely buy the stock based on the popularity of that particular Funko Pop. I'm less confident that that one Funko Pop is going to move the needle for the company. So it's not something that I'm really throwing a lot of weight behind. I'm continuing to watch it. If it brings more people into the Funko universe and they end up purchasing other Funko Pops, that's the real opportunity for Funko. And honestly, the data for Funko is looking really pretty decent here in mid-December. So it's interesting, but it's not something where I'm going to say, hey, this is a high conviction or even a medium conviction trade for me. It's just something I did for fun. Other brands that are showing some good data strength going into the holiday season, one we talked about quite a bit, Crocs. Crocs had a strong spring, even stronger summer. And here we are going into winter 2019, 2020. And Crocs is still showing strength. It's rather unbelievable how strong they are this winter. And if you'll remember from last year, fuzzy Crocs or furry Crocs, the Crocs with the fur on the inside, we did an episode about this last year. You should check it out if you haven't watched it. They're stronger this year. Looks like they're 50% stronger this winter than they were last winter. And we're still very early in the winter season. So they should have really good sell-through. That's interesting. Even another shoe brand, Skechers, is showing really strong data going into the holiday season. The problem is that Skechers and Crocs, these stocks are trading towards their highs, so they're really less interesting. The information's out of the bag. And the whole world knows that Crocs are hot and Skechers are hot right now. So it's a lot less interesting than if we would have seen these stocks in the past and been earlier on and noticing the acceleration in brand traction. It makes the trades a little more difficult, so I'm a little less excited about them. But one I want to discuss with you guys, there's one more. Jordan, Dave, you there? You still here? Okay. This one is one that we've talked about it a little bit, and I just can't make up my mind on it. I'm just not a believer in it in terms of a long-term trade. But for the holiday season, the data is astonishing, okay? Peloton. And I know we had the whole Peloton commercial thing.
Yes.
And I'm not talking about data, people speaking just about the commercial. I'm talking about people actually speaking about buying a Peloton, people doing keyword searches on, how much it costs to buy a Peloton, where they can buy one at, right? Like what a subscription called, like all these, what we call buyer intent keywords. Those are the things that we track. Those are really, really strong, okay, for Peloton right now. And the most exciting thing I think about this company is their peak season is not actually December. It's really going into that early January when people think about exercise and diet. That's usually when you see the peak search volume and web traffic and social mention frequency hit all the health and all the diet companies and all the fitness companies. So for Peloton to be going into
they're off, with the bad press, they're off their highs. Is Peloton a buying opportunity at this point, just because we're looking at a depressed stock that still has consumer demand and a lot of online buzz and all of those things?
You have to separate, is it a good value like as a company? Because it's a $10 billion company long term. Is that reasonable for a fitness company or not? That's another debate. What I'm speaking about is this quarter. Are they going to beat their numbers, right, this quarter when they announce, I think their next announcement was at January, February. It must be sometime in Q1 2020. That's what I'm really focused on here.
Yeah, I think you've got probably the most publicity that Peloton has ever received, right, leading up to this holiday season. So that is going to do nothing but good things for them, right? Because their name is front and present. Everybody thinking about buying a Christmas present or something, that might be the one. Now, the downside is you've got a pretty big investor of theirs saying that the stock's going to drop to $5. He just came out last week and said that. So
have you read that report?
Yeah.
So
Chris just left the.
I'm back.
This is just like real television, where the guest just gets out of his chair in the middle of the interview.
See ya.
Why not? So I read the report, and they actually had some interesting points and a decent perspective from a short perspective, kind of a short perspective on Peloton. But I think they were kind of grabbing at every possible negative. And what I hate about these short analysis reports that are published is, if you're truly short on a stock, you want to produce a report on why you think that stock is a short, you better include the risk factors of why you could be wrong, or what things could, what are the long arguments against your short arguments. They just did a terrible job of pointing out where they could be wrong and what the risk factors were. When you produce a long report, right, like actually do analysis on a stock long, you're pointing out, well, if this or this happens, we're in trouble, right? Like, we could be wrong on these things. And if the company does these things wrong, then our long thesis falls apart. Nowhere did they really do that in their short thesis, which tells me that they're just trying to push an agenda on the investing public and not really being honest about, both sides of because there's two sides to this, right? Just like Tesla, like there's two sides to it. And like, you can't say convincingly that there's nothing that Peloton can do to be successful. That's ridiculous.
Yeah. I mean, I just think, like I said, on the plus side, this commercial, I hadn't even seen the commercial until all the negative press came out, and then I watched the commercial, and I thought it was a pretty good commercial. So, bad news can be good news too, and I think they're getting a lot of pub out of this whole thing.
Well, we'll find out. We'll find out soon enough. I haven't made my decision on it, but the data alone is strong enough that I think it's worthwhile just taking a much closer look at Peloton. And I'll continue to watch it going into that critical second week of January, because those are really the critical weeks for that type of business. And if I see the data continue to accelerate, it could make for an interesting short-term trade. I think you can still debate, all right, is a bicycle, is a tread company and an at-home bicycle fitness company worth $10 billion? How reasonable is that? There will be competitors. I mean, what do you think? Jordan, you have one, don't you?
Yeah, I've got one. As far as I think their value prop is a little bit better than, just being a stationary bike. I think their content is really good. They've got really compelling instructors. I think they're, way ahead of everybody else, like Nordic Track or anybody else that's trying to get into this. And they've got a certain panache too. They've got followers. They've got people that are, really excited about the Peloton brand, that try to bring in new people. So it's, I do think they've got a cool factor going on right now that the other companies just don't have.
What is their selling price on this crazy bike?
So the bike, and they're offering new plans. When I bought it, it was, give or take a couple $1,000s, and then you prepay your first year of lessons or first year of content, which is like $30 or $40 a month. I think it's $40 a month. So but then, after that, you have an ongoing fee of $40 a month to be able to access their content.
How does that compare to other bikes? I don't know the market for these bikes. Is that, that doesn't sound outrageous, and Peloton has this kind of premium brand kind of feel to it.
Crazy high bike. It's crazy high.
The bike is expensive. Like, you could buy another exercise bike that's equivalent, that just doesn't hook into Peloton quite as well for, half the price, a quarter of the price. So it's a premium service.
What is the barrier to entry to someone else creating content that is biking content that you can use with any bike. I know it's like there's competitive, it's a wired bike, it has a bunch of things going for it, but wouldn't it be possible for someone to come out with a, we're just the content, we're the instructors, we're the spin class, we're all of those things, but we're just not hooked into your actual bike, and sell a subscription that's a premium. It's instead of $30, it's $50, but you didn't have to buy any equipment.
Yeah, I think the magic is hook into your bike, and like the instructors will actually interact with you live, which is really interesting. And so, like, let's say that you have some milestone ride, or it's your birthday or something like that, the instructor could actually call you out during this live stream ride and say, like, hey, Jordan, like that, you did 150 rides, congratulations. And you feel like you're a part of the community, which is.
I think it's bigger than that, Dave. It's a cool factor. It's a community factor. You're part of something. You're part of something bigger than yourself. There are other people out there in the Peloton world. Listen, in an Instagram world, like, you want to be able to say, I'm going to do my Peloton, like I'm going to Equinox or whatever. It's just like, it's not something that I'm into, like showing off in that way or connecting to people in that way. But like, that's a big part of how what drives people's buying decisions, right?
Yeah.
I mean,
people join Facebook groups that are all about, the classes that they're a part of on Peloton. And so there'll be like a Facebook group for this one instructor or for the type of training that they like to do. And people are really active on those things.
And also their bike is crazy expensive, but from what I understand, it is an amazing bike. Like, people say it's like one of the best bikes that you could buy. So they do a really good job with their hardware, and their tread is also, supposedly people love their tread, which is a new treadmill product that they just came out with. Also really important, they are now financing the bikes, right? They're financing the bikes and the tread for the first time. So in addition to paying a monthly fee for the service, you can actually separately finance the bike and the tread, which is like $4,000, I think, something like that, if you wanted to buy the treadmill.
Yeah.
And just an interesting social data point, Jeff Sawyer, one of our viewers, just wrote in that he bought one, and the delivery people said they have 4 more deliveries that day, and they've been delivering a lot more than usual, according to them. These delivery people were also new in the last 3 to 4 months.
Okay,
thanks, Jeff.
Here's the thing. I mean, that's great feedback, but you have to be really careful there, because obviously going into the December season, they're going to be delivering a lot more than normal, right? And going into early January, they're going to be delivering even more than normal there. When we do a lot of these, interviews, we interview store clerks and managers, and we're always trying to assess, in real time, product demand. And what you want to ask when possible, and it's probably not possible at Peloton because they're too new of a company, but you want to understand how they're doing relative to the company's expectations, right? So if the company had expected to do this many deliveries a day, but now they're having to hire more people, or you're having to work extra hours because they are, their demand is higher than the company or even your installing company had anticipated, that's the information you want as a trader, right? Is it better than the company expected? And it's not easy information to get from an installer, but we've done it before, right? We get that information all the time. When you're asking the right question, you never know. Listen, you remember that Under Armour trade from years and years ago, when just a regular store clerk we were having a casual conversation with about, Under Armour cold gear, was like, yeah, I just got off a company phone call, and like our web traffic is like twice as high as we anticipated it being this holiday season. Like, well, thanks for the information, right? You never know what kind of information you're going to get just talking to clerks and delivery drivers and people that are involved with the company. So it's always a good idea to ask.
And it's really comes down to like matching up information. So if you can find something in one of their SEC filings or an analyst report where they've expressed, what they have done historically or what they expect to do this next quarter, and then if you ask not just one delivery guy, but a dozen delivery guys, compared to what you were doing this specific time frame where you have some numbers, have you seen more or less? It's a numbers game, and trying to find that information and correlate it and try to make sense of it is, it's what we try to do every day.
Yeah. So Peloton, I don't even remember if I bought it or not. I might have bought a tiny. I did. I think I picked up a small amount of Peloton, but I'm really watching it through the holiday season to see if the data that I look at, and we look at a lot of data, guys. We look at a tremendous amount of social data, search data. We have subscriptions to web stat data, so we can actually track web traffic to their websites, app data. We have access a lot of times to transactional credit card data. A lot of the things that a lot of big hedge funds utilize. We spend quite a bit of money, even as personal traders, to have access to that type of data. And if we see anything that looks really interesting, things that get us really excited, we'll always try to share that, probably through one of these live. I think these live episodes are a lot easier for us to get up and going on virtually no notice. So we'll do that in the future rather than producing full trade boards that can set us back a few days to a week. Not that you should be mirroring our trades, because your risk factor are different than ours. So we never recommend trading based on what we're doing. We just want to share with you what we do, why we do it, to help educate you and entertain you. And hopefully you can pick up some tips from us and adopt your own trading strategy that better reflects your own risk.
Yeah, it's really not about our trades. It's about a way of thinking and learning how to spot opportunities and find your own trades.
Yep. Anything more? No, there's no barbecue in this episode. Although, no, I had.
We could actually do this from a barbecue place, though. We won't have split screen probably, but if we have 3 phones set up, maybe we could do it. Who knows?
All right. Well, we will work in a live episode from a barbecue, one of our favorite barbecue joints here in the city soon. We got some great episodes coming up, guys. If you're not aware of this, we have Jordan. Jordan, how's it? Are you prepared to do what we discussed with your safe? Are you getting close?
Yeah, I've been. We haven't
actually shown the episode. We just finished editing, and tomorrow I think actually we should. What time do you guys want to see this? I have not scheduled it yet. I just uploaded it, and I'm planning on making it live maybe tomorrow morning.
Yeah.
So let's tell everyone, this is a tease. This is a major market tease for what this episode is. We're not only going to reveal things that we fallen, like scams and fraud that we have fallen for, but we're also going to bring it close to home where this guy, I don't know which way to point, Jordan's living amongst fraud. That's all I can say. Is that a good tease? Does that make you want to tune in tomorrow?
Okay, so 2 things. I'm gonna tell you how I lost $35,000 in a major pyramid fraud scheme. Okay, what I learned from it and how I'll never fall for it again. We're also going to show you how Jordan is intertwined in a scheme that is literally one of the biggest in history in this country. How it impacted some element of his life, and how we have a surprise ending that you really want to see. I mean, I can't wait to start this. It's going to be a multi-part episode probably. So let's you'll see tomorrow if you're watching Dumb Money tomorrow morning.
Tomorrow at 9 a.m. Central, 7 a.m. Pacific, 10 a.m. Eastern.
And yeah, one more question. Can't answer right now, but we will review our biggest trade mistakes. That's a full episode, right? So we will have a full episode coming this year on our very largest trade mistakes. We have made some really bad trades over the last 25 years.
Our biggest trade mistake of this year is actually an episode that you can check out right now, and that is our Popeye's Chicken Restaurant Brands International trade. I think you can. Biggest of all time, maybe. We'll have to go back and look at our taxes.
All right, guys, we'll see you tomorrow in our episode, and a lot more of these to come if you like them.
Thanks so much for watching.